Good morning. Welcome back, everyone, to the Schwab YouTube coaching channel. It's our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a soon-to-be sunny Denver, Colorado. Beautiful morning on deck here. Today, I am pleased to be joined by my friend, Mr. Ray Kimbrell. Good morning, Ray. It's great to see you, man. How are you?
Good morning, Kevin. I'm doing great. Thanks for asking. I know you're doing well too, and it's already sunny here in Dallas.
Yeah, it's just starting to peak a little bit over the eastern horizon there here in Denver. But hey, Ray, it is the winter solstice, if you can believe it or not. That means I think it's our shortest day of the year, and obviously a pretty short week for the market as well.
Yeah, it is, and looks like everybody's still looking for that Christmas bounce to happen, huh?
Yes, they are. Yeah, understandably. We were hoping that we were going to continue that from Friday. We actually had a decent day, and we do have a little bit of a bounce underway this morning. So let's make sure we get to all the details with you. So first of all, we are joined by Brent Moores in the chat today. Say hey to Brent. He'll get to comments and questions Ray and I are unable to, but we're going to keep an eye on posts in there as well. We'll try to bring in your questions and comments where we can. So please feel free to post in there for the duration of the show. Remember, you can follow us on X as well. Brent Moores, CS, Kevin Horner, CS, certainly a great way to see what we're thinking about as we're watching the markets with you. Try to post a bunch of charts for you there throughout the week. So if that's what you're looking for, certainly give me a follow there. I know Brent also provides a multitude of great charts and data points and information for you. So great idea to follow us. Now, let's get to our disclosure so that we can hit up the charts that you all are waiting on. So first of all, remember, our conversation here is exclusively for your information and your education. We do not make recommendations. We do not make endorsements for any specific approach to trading the market. We do, however, cover and discuss technical analysis as we review the charts here. When we're doing technical analysis, please just remember this is just one of your decision-making puzzle pieces. We discourage you from making decisions exclusively off what you get in the way of technical analysis. Now, we will be following our traditional methodology here today, which is top-down in nature. So we're going to start broadly. We're going to look at the big indices, the S&P 500, of course, the NASDAQ 100, the Russell 2000. We'll expand to get into some sectors that are potentially on the move here today as well. And then, as usual, some stocks in the news. So that should set the table for us. We do have a shortened market on Wednesday. It's a half day. Of course, Thursday, the holiday, full day off. There will be a full market day on Friday as well, though we will not be hosting shows. So just a heads up to all of you. Now, with that, let's jump right into it, Ray. We're going to look at the S&P 500. I've got it kind of banded in here, still within this wider range, but it looks like the moving averages might be taking over precedent here in the shorter term.
Yeah, I'd have to agree. I like the way you drew in the support and resistance there. I agree with it, and also looking at the two shorter moving averages, kind of trying to almost did a crossover. They kind of bounced off, and it's following along right with it. So yeah, I agree with you.
Yeah, we're right there with a nice little gap move this morning above the 20-day, or actually closing above the 20-day on Friday. Giving us what some would say is the high above the closing high above our high of the low day, which is great because our low day was one of those ugly candles, Ray, and we sure had plenty of reason for maybe using that ugly candle as a means of lightening up positions. I could understand if a trader was feeling uncomfortable following that candle day, right?
Yeah, that can be a little bit of a going into the long weekend coming up, obviously, and a little nervousness probably growing. But yeah, I agree that seeing something like that, actually, and prior to that, the indecision candle, doji looking candle, large right before it, can make people go, "Oh, looks like they made a decision," and
Exactly.
Yeah. So yeah, that could make some people some nervous. It did pull down though to an intermittent level of support when it did do that, which is a little bit of solace to make you feel a little bit better if you're looking at that. But yeah, it turned around nicely that last on going into the weekend.
It did, and we're going to go with it because that's what we like to see. But I'll admit, the day you get a bounce here, if I zoom in just a little bit, I'm looking at it on this day, and we came down and tested the 50-day. You get a doji that day, and it was a legit doji, less than like 0.12 or something was the discrepancy between the open and the close. So it was a legitimate doji day, and it felt like a day you should get a bounce, and then you get this collapse move the following morning, and it just closes at the low of the day. Like I say, we traders, we need to be positioned so that we can manage these uncomfortable days. That day really caught me off guard. I didn't expect it, and I'm sure that when you look at where we are in the middle of all of this, many a trader now would maybe say, Ray, hey, if we traded under that low that we just created right here, I mean, is there any reason to think that we wouldn't go down to the next low if we took this low out?
Yeah, I mean that if you look back, those two giant candles in that lower channel that we have driven there, right, or drawn there, kind of brings you right back to that decision as well. I mean, it kind of reinforces it, so to speak. So yeah, I mean, so it was probably it was nice to see that Harami, I guess you could call it Harami, on after the big fall. Was that Wednesday?
Yes.
I guess it was Wednesday. Yeah.
Yeah, this day here.
Yeah, and then you got that right on the moving average, and then Friday's big move up, crossing back through that 20-day. So yeah, that's little strength throwing back in there.
Well, we'll certainly take it, Ray. I know this much. It's really hard to parse every single single daily chart move. Like a single candle is really hard to tell us what give you the impression of what might be the next opportunity. We don't want to overdo it. We don't want to think too speedily here as it relates to the broader trend. The truth is, with the S&P where we are right now, we are, let's see, our intraday high was this one. So the intraday high, 69.20. We're about 50 points away from it. So we're not going to overdo our view here on the S&P. Everything is still largely bullish and in terms of the broader trend. Now, if the trend were weakening and tiring, that's one thing. And you might say that that's a little bit what we see here in the NDX, though, Ray, because one of the things that we've learned in the last few weeks is that we've seen a bit of a broadening of the participation groups. It was so heavily technology and AI discussion leading us to new highs. Well, it seems like the NASDAQ isn't quite as bullish or strong in the near term as we've seen from the S&P.
Oh, I'd have to agree. And I think if you want to draw a line connecting the two, the double top, the kind of skewed double top that's kind of showing a lower high
on
the second time, that kind of lends to that weakness that you're talking about, that it's showing in the index. And hey, could be, yeah. And then, so we'll see how it happens. It's still showing that same activity around the two shorter moving averages.
Yes.
You're getting almost an upward, if you will, on the two lows it made. So you're kind of squeezing in a little bit. So it'd be interesting to see how it's going to react coming out of the long weekend.
So I think what you're talking about is something like this, right? If we made a higher low, or even if we did increase the slope here, something to watch maybe. But I think the biggest issue, as I think about it, kind of takes us back to an understanding of, once more, what are the groups that have high percentage of investment in these indices. Again, we know that the NASDAQ 100 is almost exclusively technology, extremely weighted towards technology. So when we look at something like relative strength here, which is going to take a second to work its way through all the calculations, what we're going to see is that tech hasn't been the leader that it had been. And we will notice additionally that some of those other groups have been leaders, financials, industrials, etc. And when they're leading, that's not a terrible thing, Ray, but it's also not the strong growth market that we're used to seeing when technology is leading.
Especially NDX. Yeah, it raises its ugly head when it gets a little bit of weakness growing there, a little bit of slope, if you will, or it's not the subject of the day all the time.
Right. Well, you don't generally get back-to-back 25% SPX years if you're led by, financials, right? Or energy. Those are not likely to occur. So it's important that we know those the makeup and components of these indices. You all hear me trying to remind us about that frequently here in this class. So we'll continue to keep an eye on that, obviously. And then if you're wondering about it, just a visual reflection of that, you can always lean into your to your heat maps, excuse me, everybody, and you can kind of see just where we have the size associated with these groups, right? Certainly tech and communications, big chunks in the S&P. And here in the S&P, real estate materials, small, energy utilities, small. But if we kick that over to the NASDAQ 100, you're even smaller numbers of components, right? So you have, you've got these finance, a couple of them. You've got energy, a couple. You've got utilities, a couple. But the point is the allocation to these indices makes a huge, huge difference. So that's why we have this understanding of why we're seeing NASDAQ lag a little bit. In the grand scheme of things, Ray, it's not a terrible thing for us to broaden out the rally if the ultimate move is a settling or just a continuation or consolidation, pardon me, of the technology space. That would be okay for us broadly, right?
Yeah, I think so. I mean, it is still a driver. I mean, the obvious AI, what's going on with that? We were in the advanced options class over the weekend in Miami, and a contributor to the show all the time, and Rachel Dashiell, she and I are talking about the metals when it comes to AI and silver and things like that. So it blends into a lot of different areas, And and as you're saying, it's good to watch and brighten and widen out what you're looking at, because if you just hone in just on one thing, you're going to miss a lot of other.
It's easy to do, right? It's really easy to do. You can miss out on plenty as it relates to what's going on in the market.
Yep.
Excuse me, Ray, this is an interesting look on the Russell 2000, because the throwback to the 20-day here seems to be almost spot on, right to it on the big ugly candle day, the same one we saw in the SPX and the NDX, and yet the Russell is back to making shorter term moves again. This looks like we're going back to the high that we just tested. I say it looks like, obviously there's no guarantee we're going to get there, but that's what the structure of this chart shows.
And unlike the NDX, this actually is making a higher high. You want to look at, draw that broader top support, resistance level, as well as that resistance level right there. Yeah, I mean, it's a little bit more bullish looking and then the NASDAQ was looking, so to speak. And so I think you're right on the money with especially off that 20-day moving average, the orange line. It's following right along.
And that trend change too. We had a brief period here with the 20 below the 50, which basically coincided within a week of us making our short-term low. And then when we recaptured it here, it was 3 days for the bounce, and now we're back into trend essentially. So this looks like a proper setup, a setup under which at least traders would have some levels where they would look to maybe lighten up if we pulled back. A close under the 20-day for some traders now offers a reason to lighten up any longs in the small caps specifically. So that doesn't look terrible by any stretch. And again, we're really close from that peak to where we are right now. This says we are pretty darn tight, only 1 3/4% away from the highs there. And of course, I'm sure part of this is tied to the 10-year yield. Now, the yield here is what we've been watching very closely, everyone. This last 2 to 3 weeks, Ray, where we've set higher lows is notable. We cannot ignore it. It is true we remain below 4.2, and we did hit our head on it a couple of times in the last few weeks, but is this developing potential new uptrend here somewhat concerning as it relates to yields?
Like we teach all the time in our class, Kevin, when you're out there with us, what's the definition of an uptrend? Higher highs, higher lows, right?
Yes.
And we're getting a series of that. All right. And so, it could be showing a change up. You got the crossover that you've drawn earlier, or not, you didn't draw it, but the 50-day crossover occurred back about a month ago or so.
Yep.
And so it's following along. As a matter of fact, it's just like the when you showed the was it the Russell a minute ago? Yeah. Yep. It's falling right along the moving average again.
So I think, Ray, there's a bit of an understanding or maybe expectation here that we're going to get another maybe 50 to 75 basis point cut between now and this time next year. So 12 months out, that fits the expectation. But Ray, we have to pay attention to what's actually happening here because even expectations don't tell us what's going to actually occur with the real yield and how traders are going to handle investment in the 10-year note. So if they're willing to believe in the US economy, they're going to buy up the 10-year note and it's going to push yields down. But if they're less comfortable, they're going to be selling 10-year notes and it's going to rally yields. And what are we going to do then? Well, I'm afraid if we get through that 200-day moving average or 4.2 first, I think that's when we're going to see some headwinds on the Russell.
Yeah, I totally agree with you. And I like what you said a second ago, Kevin. You got to trade what you're seeing. You know, what you hope, feel, think, want. You know, you can wish it, will it, all you want, but you know, you got to look at it and go, oh, that's not what it's doing.
Yeah, you can get into trouble trading what you think as opposed to what you see. At least that's the way I think about it. Now, Ray, one thing that I'm seeing in the chat here, Greg was asking about equal weight. If we're looking at things, we do have an equal weight index on the SPX. So I thought real briefly, here's your traditional cap weighted SPX, remember carried by the largest of the companies in the S&P 500. And we're not yet making new highs, though we are working our way back to it. If we wanted to look at the equal weighted SPX, this is that. We did, in fact, break to new highs last week. So our leadership last week, once again, was not from tech, which has been under pressure, but from maybe industrials and financials, as we'll see momentarily. But Ray, when I lift this line from my chart, this still looks relatively bullish, doesn't it? I mean, it's short term, like a bit of a bull flag at an area that was resistance previously.
And that nice bounce through that. Just as the other indices were showing as well.
Yep.
So I totally agree with you. It's you know, and it's made a higher high.
Yeah.
Overall, it's broke out of that pretty strong level of resistance. If you want to draw the horizontal one, right where you started that diagonal, you know, going back, and it's right there, right through there. And so, you know, and I understand, you know, and I love when you do this, Kevin. You show all the indices going in, and I hope people who are following you are telling their friends, you need to look at the four major players, you know, and not just look at one and go, well, here's what the market's doing. You know, this is the whole market.
Yeah.
And especially if people would just look at the Dow, you know, 30 different companies.
Yeah.
Yes, powerful, and they're drivers. I'm not trying to down cut it or anything, but you know, your mental approach to the market. And I think you're bringing this out well. And I know people who follow you here do understand that, but I hope they pass that along to other folks. Is look at all aspects of it, and I think you do that well. And it's a good thing for the traders out there.
I appreciate that, Ray. Thanks, man. That's the reason why I have you on all as much.
There you
as
go,
I can.
man.
Good.
Got to keep you going, especially at Christmas.
Okay. Let's see how those we're going to do two more of the broader indices here, and then we're going to get into sectors. First of all, we're going to look at the semis. Semis have bounced back a little more slowly, but nonetheless a bounce back. A little red here. We had a good open and we've traded down a bit, but once more, Ray, everything we said about the NDX could probably be applied to the SOX here.
Yeah, I totally agree. It's almost a mirrored chart almost.
Yep.
Yeah, it's pretty strong double top going on right there as well. So I'd like to see where it's going to roll through this. If it's going to bounce through it, create maybe create a triple top. You never know.
Yeah, maybe. Certainly a possibility. We can always talk about what might be coming, but if you're a trader, you have to think about the way these patterns look, what they might be in the midst of setting up, what they might, how that might play out. You know, if you have your ideas and your thoughts about process, thinking about what might be coming is a good way to know how you're going to make changes to your portfolio, right?
Hey, Kevin, check something out real quick here.
Yeah.
You got the RSI in the bottom here.
I do.
And one of the cool things is you got a higher high. Like I said, the double top that the SOX just developed, right?
Yeah.
A little bit higher. But look what's going on with the RSI. Overall, for the same time frame, it's gone down a little bit.
Mm-hmm.
So, you know, kind of getting a little bit of a divergence, not a huge one, but it is showing that. So, that could lend to the fact that you might come up to see a very strong resistance level that has developed right there. So to watch this and see where it bounces through could be a very interesting move.
Yeah, Ray, sometimes we get these divergences, and what it ends up being is what we've seen in prices, which has been a lot of back and forth.
Yeah.
Very gentle new high relative to the one before.
Yeah.
Maybe we meet matching highs as opposed to breaking out. Obviously, I would think if we popped through and made new highs, we would see the RSI move into that potential overbought condition, but that doesn't mean it has to get there.
Right.
But, we can see these divergences play out over many, many months. And really we have, because the highest high we've had in the RSI goes back to before here. This is October, and here we are wrapping up, the month of December here. So basically 3 months of divergence, and we do have 2 new highs in that 3-month window nonetheless. So
Yeah.
I think it's notable. But it's not confirming a breakout or anything like that. And granted, that's fine. We haven't broken out. So
Exactly.
it doesn't have to confirm anything just yet.
Exactly.
All right, let's look at the transports as well, and then we'll get to the sectors. I thought this was a really notable move here, Ray, because out of this consolidation, we have started to run really nicely, so nicely that the 20-day is too slow. That's what my orange line is. I've drawn in a bit of a bull flag. We are at all-time highs, essentially. Here's the 10-day, though, and I think this is what many traders are probably watching now, because going back to the 24th of November, Ray, we've been above it. So you're almost at 4 full weeks now.
Yeah, and it's taken off as it's noted here with that bull flag pattern. Yeah, very strong looking.
Yeah, and that's this is partially. The question, I guess, is what is leading this? I'll show you some leadership. Here's the weekly chart, by the way, everyone, on the transports. So you could see the important level we're pushing into. I mean, this was really the most important high, I think, back from November of last year. But, eliminating this one-day huge candle move we had in October of 21. The interesting thing here to me is the groups. So as a reminder of some of the industry groups in here, how about the truckers? Whoops, I think I messed up my symbol there. Let's try it one more time. DWC TRK. There's your truckers, Ray. That's given a pretty clear bull flag indication right now. And then we can also show something similar with the rails, part of transports, showing a bit of a bull flag, but at a prior high level, so working to get through it. And then the third likely component that's very important as it relates to transports is going to be air. And the airlines, Ray, have been absolute. I'm going to do it. I'm going to say it. They've been flying, Ray.
They've taken off. I thought you were going to say they're on fire, which would be another not too good thing to say.
All three doing something similar, sir.
Yeah. So, yeah, it's definitely airlines have been a strong pusher to this whole thing. Look at that. I mean, you can't deny it. You got, again, going back to what you're seeing, not what you're willing, thinking, or hoping. It is what it is.
Well, Ray, I got to say, I'm not sure if it's my volume, my audio that's cutting out, or yours. So I think it might be mine, but we're going to keep moving here because I'm having difficulty, but I think we're okay. I haven't heard any indication, and you guys are all telling me you're good. So
okay, yeah, okay.
Okay, so here's what we want to do, Ray. Let's move into some stock, some of these sectors. We just looked at transports and 3 of those big chunks of the transports. This also includes, though, industrials. And Ray, when I'm looking at the industrials, it looks a lot like what we've seen with transports, but except that industrials is kind of still in its consolidation, trying to work out of it. This is a group that's been moving, though, ultimately, and potential to maybe move to the upside with some bullishness.
Yeah, it is definitely, and it's definitely trading higher. It looks like when you look at we're also making the lows, and it's following that moving average along nicely. Yeah, coming in and look at today. It's right at that resistance level that you've drawn in, and so to see how that runs through is going to be interesting. Also today, big volume as well.
All right. Well, how about financials, Ray? That would be my next one. I was going to push us there because the chart here looks similar,
Oh yeah.
except for today's move breaking to the upside.
Yes.
Nice little development on that bull flag, huh?
Yeah, like the break, the retest on. So nice flag, nice breakout today. Definitely showing bullish, no doubt. And again, these are just reading the charts, folks, not recommendations or
Yeah, that is a nice development. I think the action today. This is kind of what I think short-term traders are
yeah,
probably watching, Ray, with this pop to the upside. A huge development day on Friday. Now, granted, Friday was triple witching day in the market,
right.
so there was a lot of volatility. You're certainly going to get more volume on a day like that. So I do want to kind of remind us that that candle might not be the
Point.
strong candle that you might think it would be on a Friday that we're not triple witching, for example. But
Very good point.
I
Very
think
good point.
I think the weekly reminder here is the key. This is a strong move to the upside, followed by the biggest of those moves, of course, was our April to our peak in here, and then we've just spent the last 4 months just in consolidation, which I think is the positive, Ray. The
Yeah.
consolidation following a big move to the upside.
Yep. You got that because all the, and then as you always teach the breakout, what did it do? And it broke and actually tested and it bounced. So
Yes.
yeah.
And it's those tests that give traders confidence to participate, right? Not everybody recognizes like the idea that you went from, oh, we're about to break out,
Yeah.
and we got thrown back to support again, right?
Yeah.
This should have been the entrance opportunity because as you look at it, we were there for a week where we just tested and didn't break down. When we started to move off of it, not necessarily that you have to be the trader stepping in on the first day of the test or even the second day. You got to know the type of trader you are. Where do you get your comfort from? And maybe for a lot of traders, it might have been like this candle where you cleared all of that mess from the prior week that got traders a little bit more optimistic. But Ray, that's such a good reminder because not everybody wants to buy breakouts. Like, a lot of traders that want to play momentum like to buy breakouts, but there are just as many traders who would prefer to be buyers of near or in the zone of support.
Yeah. Hey, Kevin, another couple of things there on that area of that support right there.
Yes.
The 200-day moving average. All right.
Yep.
And also, one of the things that we talk about in class all the time is if you look left, right where you drew that zoom in right there, look left. Like if you're not sure, if you're looking shorter term and you're not sure if that's really a strong level of support, one thing that should clue you, it is the 200-day moving average. You always look at that. And then look left like you have it drawn in here. Pretty strong areas right there.
Mm-hmm.
Then when it starts moving off of that, yeah, you back to your point. There's a clue.
And that's one of the things that a trader will take from a daily look at the chart, right? We know that sometimes that daily look can be too much information and it might not be ideal for all traders. Many of you will maybe look at this stuff on a week-to-week basis, not a day-to-day basis. It's often stated that day-to-day market movements are just noise in the broader trend of things. And that commonly is true. It's why we look at that weekly chart for you all so frequently on many of these groups, is we want to be reminded of what the real trend is. The one-day chart doesn't necessarily give you that clarity that a long-term weekly can. So some key reminders, I think, here as it relates to what we're seeing in the financials chart, but a nice move given that we've come out of this consolidation with a bull flag and then we're breaking the bull flag. So this looks continuation bullish at the moment. We'll see if that continues to roll for us. Now, let's look at discretionary. Discretionary is getting some optimism again, Ray. This is setting up once more with a test near that 200-day moving average of about a month back. This was a really strong move here in that, it's been 4 weeks. I mean, we've popped right from here. Oops, I'm going to draw a line in instead and see what our percentage move has been. About a 10% pop back. That's pretty good stuff, Ray.
Yeah, it is. And it's also, you got your crossover most recently on Friday, it looks like. Your two short-term moving averages crossed over. So showing a little bullish action right there as well, confirming that continuing trend that it has made. And yeah, but it is coming up right at that resistance level again. So again, I think we see that same repeat like we've been talking about right where we're at. So is it going to break through? And time will tell.
Time will tell. It kind of looks like like an island reversal candle up there. So if anything, I think a trader might draw that line where we need to get through right about here.
I would have to agree with you.
Okay, so we'll kind of not ignore it, but just make note of the fact that when we did that 1 day move, we were above it for a whole day, and then we were all the way back to support. So getting through this ledge probably matters as much as anything. 1985 on the discretionary space there. The other thing that I keep taking, and this is something I've been talking about for the better part of the last 2 weeks or so, Ray, is that the struggle in staples continues to speak to the optimism of the broader market, being that if staples were in a bullishly trending scenario, unlike what it is right now, this is not a bullish chart in the current period, I wouldn't think. But that speaks to the willingness of traders to take on more risk, doesn't it?
I totally agree with you. And I know you talk about this a lot. So yeah, when the staples are cranking, people are nervous about the economy. I mean, where are they putting the money? In the things that people have to have, right? And now they're saying, let's branch out a little bit here. We're looking pretty good. We can, take a chance on it. And just as we talked about earlier, the 200-day moving average was support earlier. Look what it's doing now. Definitely resistance.
Yes. Now, it could be that we are at an area of short-term support. We're sitting on the 50-day moving average, but I think ultimately the fact that we've had at least 3 lower highs is as important as anything else. Could we be, in a consolidation waiting for a break one way or the other? Absolutely. In fact, it could also be said, Ray, that we just simply need to kind of sit on our hands. If you're looking at the staples, sit on your hands until something breaks, right? Like this, until you get above one of those white lines. You can trade it for bullishness to the upside if we take out the downtrending line, and bearishness to the downside if we take out the uptrending line. It could be that simple.
Exactly. And coming off the long weekend with Christmas, or the little gap in time there, but this whole time of the year, Christmas, then going into New Year's, what's the news going to bring us? What's going to happen? All these twists and turns we get. Can move that dramatically.
Absolutely can. All right, Ray. Well, we've hit on some key groups here. Before we hit stocks in the news, are there any other areas that you would like to address here for viewers? And being I only get you once a month, so I want to make sure that I'm giving you the opportunity here.
Yeah, I don't know. You look at the metals at time to time. Look at the metals we're doing.
Sure. Let's start with gold.
Yeah.
Okay. So here's the chart of the gold futures. Now, I do want to remind everyone as we pull up the future symbol here on gold moving to new highs. Just remember that futures and futures options trading, these involve substantial risk. They're not appropriate for all traders and investors. We ask you to go through your steps, make sure you're approved before you start trading these, of course. But please make sure you're going through your requisite steps. We're certainly not recommending you be trading futures. But Ray, I think the takeaway on the gold chart is pretty obvious as we move to new highs.
Yeah, it's still showing that strength. And a lot of times, Kevin, the metals and gold specifically, a lot of people put the money, if they're a little worried, where do they go?
Yeah.
Go to gold.
Not uncommon.
Yep, not uncommon. But one of the things that's going on now also, and silver is probably more of a take on this, is when you get to the AI and building all the things because silver is the conductor in these things, and you can see look at that run.
Unbelievable.
And that's not because I think it's more towards the AI side of things and what's going on, as opposed to fear in the economy side of things.
Yeah, I think you might be right, but I think there's also a component of FOMO going on right here, because this thing has just absolutely exploded. You'll notice, everybody, my 20-day moving average, absolutely insufficient to manage risk. You need most likely a 10-day. Look at where the 10-day is on this now. again, where it's just been clean since November 25th. So almost a month here. And again, all we mean by this and looking at something like the 10-day is a close below the 10-day would be a change to what's been going on for the last 4 weeks, and therefore would maybe give traders reasons to take some step.
Yeah. And then it also is a good showing for when people say, well, it's overbought. It's overbought. Well, folks, it can be overbought for a while. This doesn't mean it's going to go down. Okay. So, yep.
And the same was true back here.
Yeah.
Overbought conditions do not imply a need to see price reduced or move lower. Overbought confirms the strength of the trend. So try not to think overbought means a sell is coming. Oversold does not mean a bounce is coming, but it can tell you something. But if you're not prepared or not thinking about it, you might be led to believe that you need to be a seller into this strength. And nobody would fault a trader who bought in this consolidation for taking profits at 68 when they're long from 45. No one's going to give you grief for doing that, but have a plan, right? Know what you want to do to take your profits. How do you go about it? Do you sell into strength? Do you sell on weakness? What's your preference? Those are all important questions to ask yourself, I think, Ray.
I totally agree. Having the plan, knowing when you're getting out before you even get in. All right?
Yes.
Exactly.
Very, very helpful. All right. Last one we're going to look at as it relates to metals, also important, is copper. So copper has held up. I'm going to go back to my standard moving averages here. We're in consolidation, but notice what we've done is just allow the moving average to catch up, Ray. So really this looks not as bullish as what we saw in silver, not as bullish as what we've seen in gold, but still a positive as it relates to what it tells us about the health of our economy, isn't it?
Yeah. I mean, it's and actually you're breaking out of that. You could probably draw even a new level of resistance in there, and that little breakout it's got going on. Right above, right there.
Yeah,
and I totally agree. But the metals have been really a mover and a shaker the last little bit here, no doubt.
All right, well then let's get to some of these stocks in the news this morning. I saw some of you posting on a couple of these stocks in the news, one of which is Tesla. Tesla's Elon Musk's net worth went up. The Delaware Supreme Court decision reinstated stock options for him, totaling nearly 140 billion. And that's just a little chump change.
Poor guy.
Interestingly enough, this thing just broke from out of an ascending triangle and bullish flag as we speak, and it's trying to break that bull flag right now, isn't it, Ray?
It is. Matter of fact, when we were in Miami, we went and looked at the mall across the street from the facility we were in, and they had the Tesla showroom. We were looking at them, but it's an amazing story. And one of the things that a lot of people always say about Tesla, oh, it's so volatile, so volatile. Actually, if you look at that chart right there, that looks not as volatile as some charts that we've seen. And, you know what I mean? So because everybody talks the game of the volatility for this stock, again, back to Kevin's point, show me the volatility. All right. Yeah. Is it making, $20 moves from time to time? It does, but it's a $490 stock too.
Mm-hmm.
So
it's volatile enough. I mean, this pullback here didn't last very long, Ray. Let me just take a look here. I think this was November 3rd or so, and then we hit this low. And this low was it was a week and a half, and it dropped 19%. So I mean, it is a little volatile, but nonetheless, that's some volatility that many a trader is going to be looking for, Ray. Traders like volatility.
Yeah, you can go back to look at a lot of charts, though, and you'll see those same moves on a lot of charts.
Yeah.
So, just take it for what it is, but and don't let it scare you.
Yeah. We should also be reminded that we don't have to trade in full lots, right? You can pick up 5 shares of a position of, $400 a share and do fine with it. Remember, whatever dollars you devote, percentage of your return is the same, whether it's, 100 shares or 5 shares, the percentage of your dollars invested return the same. So,
okay, another one non-volatile. I'm saying it may not be as volatile as everybody wants it to be. Let's put that.
Okay. It's certainly got some volatility, but you're right. It's not as volatile maybe as some may have expected, or you didn't put the numbers to it.
Exactly.
Ray, there's also some others. Some other big ones here. Let's see, there was Apple and Alphabet warning Visa employees to not leave the U.S. And this is warning on those with visas to not travel outside the U.S. due to issues and delays with their embassies. I don't think this is certainly not likely to have impact on charts, but that was one of my headlines. There was also a power outage across the San Francisco and the Bay Area that may have impacted Waymo as it relates to the riders. So let's put up Alphabet's chart in here for you, everybody. Here's Google, Alphabet, Google, what have you. But ultimately, Ray, a similar situation here in terms of the trend, right? I mean, it's been pushing higher, as you can see. 20 and 50 both moving to the upside. The 20 somewhat consistent, but we've been below it for now a week. So, maybe we're back to getting ourselves in gear here, but it does kind of present like a bull flag.
Yeah, and it's right at a level of support as well. And it's like the 50-day moving average, 50-period moving average could help that move a little bit. Yeah, I like the analysis on that for sure.
And then, Ray, I also had one from on Microsoft. So a lot of the Macs today with some headlines. So Dan Ives noted that his bullish outlook for Microsoft with 2026 in the year 2026 as the AI revolution hits a new gear, specifically relative to cloud growth. So that bears watching, I would think.
Yeah, I think so. Matter of fact, even with the big triple witching hour, like I talked about on Friday, and look at the price action on it, wasn't that affected.
It didn't go anywhere, did it? Volume was huge, but the price didn't move. Yeah. Okay, and then I did want to hit up one stock that was upgraded today in the industrials, and that's Cummins, CMI. Let me get my proper symbol in there for you all. So there's another one where, if we're watching trends and patterns and whatnot and keeping a close eye on our watch list, we might have been a little bit ahead of the game here. Cummins was upgraded at Raymond James to outperform from market perform, a new target on this one at 585. According to the note, the firm's check-in with U.S. truck dealers suggests that while near-term tone is cautious due to a potential or reflective of an extended freight recession, they claim, the notable change in sentiment in the second half of 2026 is what stands out for Raymond James as it relates to Cummins specifically. So there are encouraging signs that suggest a bottoming process for the truckload segment could be in the offing, so to speak, here. So that's not a negative by any stretch, Ray. And we saw the strength of the trucker space collectively. It would stand to reason that you would think manufacturing would have a part of that.
Yeah, but as far as the trucks go, how does that compare to Caterpillar?
No, good call. I think Cat's been on a tear itself.
Yeah.
Yeah, sure enough.
Yeah, pretty much with each other. I also think some of the things that might drive some of that is the mining and all the different with the metals and the minerals and what's going on with all that. That could be a little related as well because you're going to need. I mean, that's huge right now, as they say.
Yeah, Caterpillar 59% year to date. Cummins has had a good year. Let's see what the number is for Cummins. 47.7. So a little bit of a lagger versus Cat, but nonetheless a beautiful chart. It just keeps pushing here.
Yeah, it is.
And then I had another upgrade, and this was in the retail space, and that was Olli, OLLI, which is a so-called bargain outlet. Upgraded to buy from hold. Stands out because the stock's been under pressure. That's an interesting spot, but that's still a bearish trend, unfortunately, Ray. That doesn't look fantastic. And again, it's it's in that retail space, which is at least a little up in the air at this point.
Yeah, and you got everything's I think as a bearish trend would go, moving averages are all moving down below the 200. Struggling a little bit. How we doing? Where's it bouncing off? Is it at level of support there, kind of?
I mean, I'm trying to assign some value to that level. I'm just struggling to find it, right?
Yeah, I'm with you. It looks like it's actually down around the 98 range, probably.
Yeah, something like this.
Yeah.
Or even down in this zone.
Yeah, right in there. Yeah.
All right. Well, we'll see if that bounce actually lasts, or maybe the traders step in here based on Loop Capital's upgrade. But nonetheless forcing prices to kind of get themselves in gear before we start to believe in things. The trend is certainly short-term bearish, at least. We'll see if that changes. Ray, we got to wrap it there, though. Fantastic discussion with you on a short week Monday on the winter solstice. Thanks for being here. Really look forward to catching up with you again here in January, obviously, but hope you have a fantastic holiday, man.
And you too, Kevin. Great being with you, and everybody else out there. Happy holidays, and looking forward to coming back.
Yeah, we'll have you back, Ray. Don't you worry. And thanks to all of you for being here, participating in the show. Big thanks to Brent as well. Follow us on X, Ray Kimbrell, CS, Kevin Horner, CS, Brent Moores, CS. And if you like the discussion, hit that thumbs up. That'll help us out as we get this into the archive for all of you. Hope you all have a fantastic holiday week, a great rest of your Monday. We look forward to seeing you again real soon.